So what do you get when the dollar hovers at a 6-month high? Fed officials can't decide what to do next, and traders are suddenly feeling optimistic again. Well, you get a Monday morning that is busier than a chartist drawing trend lines on a Friday night. So before you place your next trade, watch this. Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I break down the biggest market drivers across currencies, commodities, indices, and cryptocurrencies, mixing fundamentals, technicals, and just enough logic to make sense of this wonderful, unpredictable financial universe. Let's kick things off today with USD CHF, where the pair is trading around that 0.808 level, extending a 7-day winning streak. The US dollar remains perched above 100, holding near a 6-month high as traders weigh the next Fed move. John Williams reminded markets that a near-term rate cut is still possible, arguing that labor market weakness is now a bigger risk than inflation. Markets, however, are now pricing in a 69% probability of a 25 basis point cut in December, up sharply from last week's 44%. But the Fed remains a house divided. Susan Collins hasn't made up her mind yet, and across the pond, the Swiss franc is navigating its own story. The Swiss National Bank is expected not to cut in December due to rising inflation. The Swiss economy may get a boost from US-Swiss tariffs deal, slashing US tariffs from 39 to 15%. All of this creates an interesting tug of war between the two currencies. The US dollar getting softer expectations from the Fed, the Swiss franc getting stronger expectations from the Swiss National Bank, and a classic, well, who blinks first scenario. Looking at the charts, USD CHF is hovering near 0.808, holding its upward momentum, but the upside may start facing resistance. With a 7-day winning streak already priced in, rising CHF support from improving Swiss fundamentals, and, looking at resistance currently sitting at 0.812 with near-term support at 0.807, and then the psychological 0.8 flat level, which, if the pair pauses or pulls back slightly, that wouldn't surprise anyone right now. Even the most bullish dollar fans won't really be surprised by a small correction at this point. Looking at commodities, silver is trading near $49.85 after an extremely volatile week, with the metal stabilizing but very much on watch. Silver spent the past month climbing 6.83% and over the past year surging a whopping 66%, testing all-time highs near $54 an ounce. Today's calm, however, comes from a dovish Fed commentary boosting the odds of a December cut. Again, that 69 probability that we spoke about a little bit earlier. But policy members remain split, a theme becoming as common as trendline breaks in a ranging market. Investors are now turning to retail sales, PPI, and jobless claims later this week for direction. Looking at the charts, this is where things get a little bit interesting. Silver is trading below the 100-period EMA on the 1-hour chart, a sign that markets hasn't regained strong upward momentum. The metal is also showing resilience, but also vulnerability, often a polite way of saying, be careful, things could go either way. Key support is currently sitting at $49.30 and then the psychological $48 level. Resistance, on the other hand, is at $50.90, then last week's high, which is $52.50, and the major barrier to overcome is that $54.40 level. In short, traders, silver is steady, but we need to be watching this chart like a hawk watches a weak candlestick pattern. Let's finish things off with equities. The Nasdaq 100 is trading around 24,430, up 0.77% this morning as sentiment started to steady. After a rough few weeks for tech, and we can blame chip stocks, questions about AI valuation and ongoing export restrictions, the index is seeing some renewed optimism. Drivers today are things like the same dovish Fed commentary that is lifting rate cut expectations, renewed hope that Nvidia might regain access to Chinese markets for its H200 AI chips, and US officials are reportedly discussing easing export restrictions, something Nvidia's CEO has lobbied for heavily. Also helping sentiment is US futures were green across the board, Dow, S&P, and Nasdaq, with traders welcoming the rebound in tech. A significant batch of delayed US economic data arrives this week as well, which could add new momentum or new volatility. Looking at the charts over the last 4 weeks, Nasdaq has gained 5.42%. Over the last 12 months, it is up a whopping 17.39%. So even as recent volatility shows that sentiment in tech is still fragile, trading economics place forward projections on this index at 23,481 by the end of the quarter, and then 21,344 within 1 year. Resistance is currently sitting at 24,600, which also aligns with the 50% Fibonacci level. Near-term support is sitting at the psychological 24,000 level, which also aligns with last week's lows. That creates a wide field of expectations, the kind where strong fundamentals and strong emotions tend to collide. So the big question here for us going into today's trading session and heading into tomorrow is, will the Fed cut optimism continue supporting risk assets, or will the incoming US data flip the script once again? We'll unpack the next chapter in tomorrow's brief, and judging by this week's economic calendar, it could be a spicy one. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX.com and, well, go and experience the difference for yourself, or simply just click on the link in the description. Traders, until next time, stay sharp, stay focused, and trade smart.